Welcome to Strategy Saturday. I'm Charles Crillo, and today we're going to be discussing how to obtain seller financing for multifamily real estate. So why is seller financing so great? And you're taking away the whole aspect of the bank when you're doing seller financing, right? So this allows you to be more creative in your deal structuring, right? You're still going to have a mortgage on the property, but you don't have to overcome all of the hurdles that you would have to with being approved and funded with a traditional commercial bank. You can, when you're structuring it, do low down payments, low fees or no junk fees. You're going to get junk fees on all sides of the transaction when working with a mortgage broker and then working with a bank, whether what they call them points or if they're loan origination, or you're paying $10,000 or 1%, whatever's higher to your mortgage broker for finding you the bank. All of this comes out of your pocket, and you can structure it so you don't have to pay this when you're doing seller financing because you're going right to the lender. It's not going to show up on your credit report. You're going to be able to do longer terms. This is a great thing. This is one of my favorites because when you're working with a commercial bank, it's usually 5 or 10 years. Some of them will go longer, but majority of commercial banks are going to do their loans at 5 years or 10-year terms. And now, since you're negotiating and proposing directly to the lender, you can do 10 years, 15 years, 25 years, 30 years, whatever you agree on, you can do. And we do interest only. Interest only is fantastic, where you pay interest only monthly and you don't have to pay any of the principal. Okay? It's much cleaner when you're dealing with the seller. When you're sending them just that monthly, it doesn't have to be anything complicated. It's very simple. So $1 million loan, and you're sending them 1% a month, let's say. It's very clean, cut and dry. There's no prepayment penalties. This is another huge thing, another junk fee, let's say, from a commercial bank. And what this allows you to do is a traditional, like say a 10-year traditional commercial mortgage from a bank will have what's called a step down. Typically, we'll have a step down prepayment penalty. And this is usually denoted as 5544332211, meaning for the first 2 years, it's going to be 5% they're going to charge you if you pay off that mortgage. Then next 2 years is going to be 4%, then 3%, then 2%, then 1%. You're paying a junk fee no matter where you pay off or refinance throughout the term of the mortgage. This is something you can avoid when you have seller financing. Okay, allows you to purchase properties that you wouldn't be approved for a traditional mortgage. Now, some banks will have different products and services for construction loans, and they might go into some of those non-stabilized and heavier repair properties, but a lot of them will not. Or they're going to gouge you with short terms and high interest rates, maybe even variable rates as well. And allows you to buy non-stabilized properties, so properties with less than 90% occupancy, or heavy repair, high renovation, heavy lifts, as we call it, properties as well. Okay, your likelihood of finding seller financing for a deal is for properties that are owned for 15 plus years, preferably 20 plus years. You're really looking for mom and pop sellers. You want them to have high equity, minimal, if any, debt. When you're talking to these sellers, you're going to build rapport with them, and you're going to ask them what they're going to do when you buy the property for them. What are they going to do with those proceeds from the sale? Now, if they've owned a property for 15 or 20 years, they've depreciated almost to the max, which means they have minimal depreciation and minimal tax deductions left. Since they've been depreciating it so long, they're most likely only going to be able to keep 65 or 70% of the sale price of that property after taxes. Now, they know this property. They've been owning it for decades. They still want cash flow. Okay, it's pretty addictive to have that cash flow every month, but they don't want to deal with the hassle of it. And since they're paying a significant amount, or they will be paying a significant amount in taxes after they sell, it's a very easy suggestion for you to say, maybe we do seller financing and you're paying taxes on what you receive. So most retirees are not going to reinvest the proceeds into risky investments like another commercial property. Full-time investor, if you're buying a property from a full-time investor that's going to reinvest in the property, they're probably not going to be interested in seller financing. So you're really looking for older mom and pop sellers, 20 plus years they've owned the property. They don't want to pay broker fees. No one does, of course. This is a great way. If you're going direct to the owner, there's no broker. There's no middleman there to take a percentage. These sellers know they have a solid asset. They've been paid off it for 15 or 20 years, however long they've owned it. So they're going to be very comfortable with taking back and holding paper on a property that they know so well, because they're most likely going to take that money and put into a CD or savings account. And what you can do is offer them seller financing at a great interest rate that's going to be paid monthly for the term that you set. You can get a life insurance policy to pay off the loan if you pass away. It's a great selling point. And it's very important that you need to build rapport with these sellers. It's not going to be something on the first call you're going to do. It's going to be something once they know that you're a legitimate buyer, once they've spoken to you, and you start asking, when you feel comfortable about asking where proceeds are going, would they be interested in holding paper on it? Sellers that are going to advertise, they want to hold paper, or they want to provide seller financing, they're most likely going to be asking a higher price. The best way of getting the best deal is going to be going direct to the seller. And when you're speaking to them directly, you want to bring up seller financing, okay? Because they probably won't price that into the value of their property. Marketing strategies when you're looking for these sellers is direct mail is a big one, texting, cold calling. If you see them, they might be self-managing the property. They might be there. You can literally stop by. If you drive for dollars, you might be able to find these properties and stop by and actually speak to the owner if you see them out front. You're going to want to store all the information in the CRM. Okay, there's a number of free ones out there that you can utilize. And work with an attorney. This is a big one that has done seller financing deals before. You want to speak to them beforehand and have everything lined up. So once you've put out the LOI and you tell them, hey, I'm buying your property for $1 million, I'm going to put down 15%, and all this type of other terms, 25-year amortization and all this kind of other stuff, you can then give that to your attorney, and they're going to know how to draft the mortgage and the purchase and sale agreement. You don't want to have to be searching for one when you have a seller that wants to move forward, and now you're looking and trying to vet out attorneys. And most real estate attorneys have done it, but there's a lot that haven't. So make sure that you vet them beforehand and that they've done it before, and it'll be very easy for you to go from LOI stage into PSA. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com, and look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.